There's the great kind of trading quote about how you should cut your losses and you should ride your winners, but it's about knowing when you're in a losing trade. Well, primarily, certainly as a technical someone who uses technical analysis as their main decision-making tool, and actually it's relevant to someone who uses fundamental analysis, is that actually the point at which you are wrong on that trade should be defined before you even place the trade, before it's even triggered within the market. Okay, so as a technical analyst, let's say I have a view that the cable, the pound against the dollar, is going to move higher. Okay, the pound is going to strengthen, the dollar is going to weaken, it's going to move north. Okay, so that's what my view is based upon my analysis. But I also need to work out, as I said right at the start of the day, people get very excited about entries, but actually it's more important to focus on your exits. Okay, your exit for when you're wrong and your exit for when you're right. So in this case, I would already have decided, okay, and done my analysis beforehand, knowing that if price goes up, okay, then that's great, the trade will take care of itself. If the price starts to come down, there is a level at which I know my analysis is wrong, and I just don't want to be in this trade, anymore, okay? Because my view of the market is wrong, or the market has changed. Either way, I don't want to be in this long trade, and so that kind of level is already decided beforehand. So that's set. I manage my risk in terms of my position sizing, and then effectively the trade is on, and the let's say the exit in terms of cutting my losses short. That's already set. Okay, that's already set, and I just let the trade play out. So the question is, does the kind of, let's say, the constant 24/7 media and financial news, does that kind of drive sort of chasing behavior, of impulsive knee-jerk reactions to every little bit of news that comes out? And the answer would be yes. The answer would be yes. Personally, my analysis in terms of let's say the media, my exposure to the media is I read the FT at the weekend, and that's about it. So that's I'll read about it. Occasionally I might log into Bloomberg if something's happened, but literally it's for like maybe 10-15 minutes. That's it. Okay, it's I think if you're gonna be successful as a trader, you have to develop your own analysis style, and you need to learn to back yourself and to back yourself regardless of whether the trade fails or whether the trade is successful. Okay, both outcomes you can learn from. So I'll tell you like a story from my own experience. When I started out years ago, I used to trade like the pound against the dollar. That was kind of like my main trading currency. So I was trading a cable, and I'd get up. What part of my plan was in the morning, I would get up and I'd actually take a physical screen print of what the chart had done, for the previous day, and I would like draw on lines. Okay, this is where I think the market's going to go today, and these are the levels and stuff. And it was kind of like part of my routine to get my head in the game and understand what I was doing. So of course, here's my day. I've decided that the pound against the dollar is going to rise. It's going to go north. It's going to go up. Okay, I want to be bullish, and if it breaks this level, I'm going to be a buyer, and away we go. And then I switch on Bloomberg, and some old silver-haired fox from some trading firm who I've never heard of comes on and says, "Oh well, everybody's selling cable today. Everybody's selling it. No one's going to be a buyer. No one's going to be a buyer. No. You want to be a seller." So of course, as a kind of a new, inexperienced trader who has just done his own analysis and said, market's going long, and I hear this guy on the TV saying, "Oh, everybody's going short." As a new, inexperienced trader, I'm like, well, crikey, this boy's on the telly. He must know what he's talking about. He must be really good at this. I tell you what, I'm just going to scrap my plan, and at the first sign of weakness, I'm going to sell cable. Okay, that's it. This guy's giving me, he's giving me the edge. He's giving me the heads up. And of course, what would happen is, the pound against the dollar would drop, and it would drop down a little bit, and of course I'd sell, and then it would turn, and then it would go north, take me out, and just go long all day, day after day. Okay, so that only had to happen like 2 or 3 times for me to start to realize, hang on a minute, these guys, they're just talking heads. You know, there's no help here whatsoever for me really. So literally, I just switched it all off. I switched off all the media, switched it all off, and just focused on doing my own analysis, planning my own trade, trading my own plan, and managing my risk. Okay, and it made me a much better trader, because what I had was I had to take responsibility. I had to take responsibility for how that trade played out. And when the trade did fail, because trades do fail, you take losing trades, regardless of what happens, is that actually the responsibility and the onus was on my shoulders. I wasn't able to sort of blame the guy on the TV, okay? And lots of people like that. Lots of people like to have people to blame. You know, oh, it was my broker's fault. Oh, it was Bloomberg's fault. Oh, it's my signal service's fault. They want to blame others instead of actually taking it on board and noticing that, no one forced you to pull the trigger on that trade, okay? You've got to take responsibility for your positions in the market. And I think that made me a much better trader. So in terms of the sort of kind of financial media, does it encourage a, let's say, impulsive and maybe unresponsible trading? I would say yes. So why do you walk around trading floors and brokers and find that they've got all the TV channels on, and why are they muted? Well, I think there's a good reason why they're muted, is because actually it's just a lot of drivel a lot of the time, and it gets repeated every 20 minutes. It's the same news, and they're trying to I don't know what it like ramp up a piece of information. But I think maybe there might be like flashes of tickers of why something has happened or a particular bit of news, but I think generally it's just kind of. I think it's generally kind of just part of that cycle, that whole environment and stuff, and people have it on in the background. But apart from providing entertainment, I can't say that the financial media has ever helped me make a profitable trade or improve me as a trader. That comes from within. That doesn't come from any kind of external source.